This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every week, it's the Weekend Warrior. It's Robb Reinhold.
Well, thank you, Patrick. And by Weekend Warrior, I hope you mean that I'm a good warrior at drinking, because I do enjoy to have some drinks on the weekend. So I don't know what you meant by it, but that's what popped into my mind.
But just so everybody knows, too, before I forget, actually, let us know down below in the comments section on YouTube. This podcast does broadcast to YouTube as well. If you have any ideas for topics that you would like to hear us cover that we have not covered yet, we are very open to your ideas. So just a reminder there. And for this episode, we are going into a topic that we've touched on a number of times here on the show. But Robb thought it would be a good idea to actually take it out and isolate it and break it down on its own. I think there could be some really good takeaways here. Even though Robb created most of this episode, what I'm seeing so far is pretty exciting, I think. So, Robb, go ahead and kick us off here, and as usual, I will jump in where it's appropriate.
Well, Patrick, what you just did was build up my ego even bigger about this episode. So I already had this big ego, and now you said, oh my gosh, this looks like it's going to be amazing, which is not always the best thing. So let's talk about ego. And I want to get into what ego is. It's basically what we think of ourselves equals ego. And if we think better about ourselves, we technically have a bigger ego. And if we think that we are just the shit, then all of a sudden we have a huge ego. We're going to talk about how this is good and bad in trading, because the first part is it's very, very good. It's very positive, because people without a big ego would never get into trading. So that's the biggest irony to this episode, is that the fact that you are even in the world of trading, that the fact you are even trying to win in the markets, means that you believe that you can do it in the first place. So if you're here listening to this, my guess is you have a larger ego than most people.
And I was going to say it if you didn't say it. I mean, given the number I always throw out there, whether it's accurate or not, I think it's pretty accurate. The 99.9% fail rate when it comes to Forex trading alone. And by fail, I mean, not get to the point to where you hoped you would get to in this trading game. The audacity you must have to think that you are that 0.1% trader that can make it in this business. Yeah, you're exactly right. Just right out of the gate. Don't anybody sit there and say you're egoless. Just the fact that you're even here proves otherwise.
It's so very true. So that's a really good thing. It's a really good thing that you look at yourself with enough confidence that you were able to actually take action and try to make it in this business. So it's fantastic. That side is fantastic. And so congratulations, you're here. Here's the problem. That ego is going to cause you some issues in your trading, and that's what this episode is about. We don't want to kill your ego, because without your ego, you can't be wildly successful. You just can't be. You need to have a big ego. But a big ego in trading also creates problems, and we need to really talk about what those problems are. Now, I got started in the 90s in trading, and I always just thought that I was going to be successful, do well, and I never really thought about my ego. I never thought about it, because what was there to think about? I was who I was, and that was it. And it wasn't until this moment, it was right around in 2000. I've been trading with one of my really good childhood friends for over 20 years now. His name is Joe, and he's part of Maverick Trading. He's been with us since 2000. And I remember arguing with Joe about a trade. Now, I'd been trading for a few years. Joe was fairly new at this, and I was arguing about all the reasons why I thought the trade was going to be profitable and be a moneymaker. And I was arguing all these points, these very logical reasons why I thought the trade was going to stop going against us and start going for us. And Joe looked at me and said, I don't care about being right. I just want to make money. And I was about to argue with him again, and I just stopped. And I realized Oh my gosh. I am more concerned about being right than I am about being on the right side of the trade. And I realized for the first time, my ego was completely undermining some of my trades because I was desperate for my ego to be right. And I had all the reasons why. I could write you a whole essay and all the reasons why I was right. But I didn't really even care about the price action that was actually happening. If a trade went against me, I'd go into my intellect and think about all the reasons why I was right. And it made me very reluctant to take a loss on the trade. Patrick, did you ever experience this at all in your first early years?
Oh my God, dude, all the time. Yeah, and you really, really nailed it with that too. When we go back and review what happened, first of all, sometimes your ego doesn't even want to do that because you're going to have to be objective and say, okay, maybe I did this wrong. But even when we go that far with it, we never seem to want to admit that. We will blame it on other things. And we'll just make things up. Like even if there is not a news event going on that may have taken price that way, we'll come up with something like, well, yeah, it's probably because of news that happened, earlier this morning or something like that. The way we justify us just flat out being wrong, I mean, that's just one example. If you give me enough time, I could think of dozens probably. Because I've been there. Yeah, I'm like, okay, I got robbed. This is not the way price was supposed to go. I was right about it. I was correct. It just didn't go that way. And you're right. We'll think of any reason we can possibly think of why that could have happened, except for the correct one. And the correct one is we were just wrong. We're doing nothing but playing probabilities here. So even if we were playing probabilities the right way, if you're wrong, you're just wrong, and you have to erase it and move on. But you're right. We fight with that early on in our careers, especially.
I absolutely love what you said. I know I'm right, but the trade has gone against me. Oh my gosh. Just think about that, because I have traders to this day sometimes tell me that when I get on a risk management call and I call them up and say, hey, this trade's going against you. They say, Rob, I know I'm right. And I'm like, wait, you're already wrong. Like the fact that you've let this position go 10, 20, 30% against you, you're already wrong. You can't be right and be down this big on a trade. It's just not possible. Now you could say, hey, it's going to come back for me, but there's no question that your timing was absolutely horrific. And so if you catch yourself saying, I know I'm right, but my position is a loser right now, I need your spidey senses to go off, because that is ego. That is ego talking, because you don't want to admit it's a loser. You don't want to admit the truth that it's a loser because your ego is tied up in it. I hope everyone has at least jumped over to the Flat Earth Trading Society, because we are making trades completely randomly. I'm flipping coins, I'm doing Ouija boards, I'm doing all this weird stuff. And here is the great thing about this. If you have absolutely no time invested in analysis of a trade, like what if I just gave you a trade and say, hey, you need to manage this trade from here on out, and I just gave it to you. You didn't do any research on it. You didn't do anything. You don't even know the name of the stock. You don't know the name of the currency. You just don't know. The way you're going to manage that position is completely different than a way that you would manage a position that you did 3 hours of your own personal research on. There is absolutely a point where too much research is done because you've now invested your ego, your time, and your efforts into that. And to take a loss is to admit that you were wrong, and you did so much research to back that up. Patrick, have you ever talked about how doing too much research is detrimental to a trader?
There is analysis paralysis now. Thankfully, the way we do things, because we eliminate most news events at No Nonsense Forex, there's only so much research you need to do. Like you need to dig into your indicators and things like that. But with something like that, there isn't a scenario that I can think of to where too much is a bad thing. You can go as deep as you want. Now you're going to waste time doing that. But I know this is, I would say, more from an investment point of view. I think it really is possible to do too much research. I do a lot of research just so I can be knowledgeable for my own investing podcast. And there comes to a point to where some of the research I do actually inhibits me from pulling the trigger on a trade, on an investment that I should have entered a long time ago. I do see things like this happen. As somebody who does deep research, yeah, that's a really good point. If it's happening there, it can certainly happen in trading too. And that is something I would absolutely avoid. You know, I get a lot of people early on in my channel. I even tell them where to go learn, and they still want me to recommend a book because they're a completionist. That's the type of research they like to do. And I tell them two things. One, no, because any book I can recommend you, apart from maybe Mark Douglas's psychology book or my own book, is going to probably take you too far away from the lessons I'm trying to teach you. But two, you don't need it. A lot of these people want to do so much research because that's the part that's fun to them that they don't even want to sit down and pull the trigger on trades. You know, they're so in love with the journey there. So on a couple different angles, yeah, too much research really is something you're going to want to try to avoid, especially in the trading market.
Well, thanks, Patrick. So let's check this off the list again. I want to go down the list of ways that ego can hurt you. When you put all this time and effort into it, you're going to convince yourself that you are right. And then when you make the trade and it goes against you, it's going to be very difficult for you to admit that all your research was wrong. And so you're going to do the thing where, yes, I know the trade is now going against me, but I know I'm right. No, you're not. Your P&L is going to tell you whether that's a good trade or not. Let's go to the next thing on my list. The fact that you are here, the fact that you've decided, hey, I'm going to become a trader, I'm going to tackle this game, you've already determined in your brain that you are smarter than the average person. When you take that into the markets and you see the markets going one direction and going one direction very, very far in a very strong trend, if you are intellectually superior and better than other people, then you are absolutely going to want to take the opposite side of the trade. Having an ego, it absolutely breeds counter-trend trading. And we hear this all the time. We have terms like lemmings. Oh, all the lemmings are jumping into this stock. All the idiots, all the people are doing this. When you look at things like that, when you call a group of people lemmings, if you go with the trend, with the lemmings, you are then admitting you're a lemming. Now, again, if you don't know what a lemming is, and I just realized, I don't think I know what a lemming is. Isn't a lemming an animal that basically runs off a cliff if another lemming runs off a cliff? Do you know the answer to that, Patrick?
That's exactly what it is, yeah.
Okay, I guess I do know what a lemming is. So if you were using terms like all the lemmings are buying this market right now, all the new money, all the idiots are buying this market right now, you can't go with that trend. Why? Because you would be a lemming. And you can't look at yourself like you're a lemming or an idiot. So the only logical thing would be to take the other side and be intellectually superior to the lemmings and the idiots. Now look, this was me for, I want to say not the first couple years, but from year 3 to year 7. I was a perma-bear. I had just lived through the dot-com crisis, and I'd made a ton of money shorting stocks. I loved it. It was great. And then from like 2002 to 2006, the market started going up pretty steadily. And I didn't believe it because I just witnessed this whole crash. I like to be short, and all the idiots who were buying those dot-com stocks, I was taking the other side of their trade and making good money. And now all these idiots were buying things. So if they were idiots, I had to take the other side of the trade. Patrick, have you ever felt that one?
Well, that particular scenario, I don't know because I don't trade stocks. And if I do buy stocks, I'm doing it for a very long time. So, exactly when I enter is not super important to me. But I do need to kind of come in and make some clarifications here because I do agree with you. Yes, ego leads to counter trend trading because you think you're smarter than the crowd. And on my own channel, from the very start, I'm like, look, this is where the dumb money's going. We need to do the opposite of what the crowd does. However, I always put this caveat in here, and I explain this too right away. I say you don't just blindly go opposite of either what the crowd is doing or what you would like to do. If you just blindly do the opposite of what you would like to do, that's called a Costanza. I've explained that in the podcast, in my investing podcast. We're not going to talk about that here. But in trading, the biggest thing I say is to do your best to avoid the really popular areas on the chart where a lot of orders are sitting. And you and I talked about this a couple weeks ago, Rob. It's my gripe against support and resistance lines. Technically, there's nothing wrong with them. There's just a lot of orders sitting there, which means the chances for manipulation either way really go up. Instead of saying that I'm going to do the opposite of what these people are doing, we just try to avoid the areas where they like to hang out. Pretty simple. But especially once you start doing that in our system and you start getting good at it, because I know this from experience, you really start to think that you are the lone exception. That the entire market, no matter how many times, no matter how many years they've put in, they're over here in dum-dum land, and you're here with a crown on your head. This is a really, really bad place to be because, one, it's irrelevant. It's just you against the market. It's not you against anybody else anyway. But simply thinking that doing the opposite of what the crowd doing is going to lead to riches, it goes so much further and deeper than that, to where I would just say get rid of that approach altogether. Yeah, Rob's right.
You said something very important in there, is that thinking you are smarter than the market or thinking you know better than the market. Take a look at all of the trades that you've made in your life. The best trades were the ones where you were lockstep with the market. Now look, I've done tons of counter trend trading myself, especially in my early years. And look, there was nothing better for my ego to have a stock that was going up or a currency that was going up and then short it and then have it turn around and you be right. There was no greater payoff to my ego because not only was that profitable, but I wasn't the lemming. I was smarter than the market. And that was just a big boost to my ego. Now, granted, I had completely forgotten about the 3 trades I made before that were all losers, and my profitable trade didn't even pay for the losers I took before, but I forgot about that because my ego was soaring, because I was on the other side of the trade. All the studies show that being on the right side of the trade is the best way to get an edge in the markets. And I know, Patrick, you have dedicated your channel to that. And look, like I said, I'll challenge anyone. You go back to all of your trades. Your best trades were when you were lockstep with what the market was doing. So, just like Joe said, I don't need to be right. I just want to make some money. The only way to make money as a trader is to be on the side where there's more buyers or sellers, period. That's the only reason that a currency, a stock, anything goes up and down. If there's more people buying than selling, the price will go up. If there's more people selling than buying, the price will go down. You are just trying to find what side that is. You're trying to be on the winning team. When you step back and you say, I'm smarter than the market is wrong. We just have had a rally in the stock market of about 15% in 6 weeks. People have been fighting it. They've been saying, this is wrong. The market's wrong. And I've been saying, why are you fighting it? Just go with it. Go with it. Yeah, it's going to fail at some point. I know that, but just go with it. You are not smarter than the market.
And we do not attempt to find tops and bottoms in my program. And Rob doesn't do that either because we are trend traders. And by definition, that's exactly what you should be. And at no point in time should you be saying that, I'm riding this trend, I'm with the crowd, this is great. Now it's time to reverse it. That's absurd. You would never do that. So just remember that at its core, as a trend trader, that is exactly what you're doing. Ride the wave, just be happy you caught it when you did, and get out at a reasonable time. One thing I will say though, Rob, before we move on to the solutions portion, because I think this fits, I want to bring up one investment anecdote that I should say, because I think a lot of you listening right now can relate to this. 2 weeks ago, I want to say, we pre-record these, so by the time you hear it's going to be a month or so ago. The guy I worked with who got me into Bitcoin, or at first put it on my radar, reached out to me because he heard my podcast and he had a question for me. And so, I answered his question, asked him how he was doing. We went back and forth a little bit, and we started talking about Bitcoin. Now, he got in pretty early. He got in around like 2,000-3,000 per Bitcoin USD. So he's pretty darn early. He bought a bunch, and he has not bought any since, which I thought was strange. He has become one of the biggest Bitcoin maxis I know, which tends to happen when you get in early. But I asked him, Bitcoiners right at about 40,000, 45 in that range. And I said, so are you going to buy more? And he's like, no, I don't really think I want to buy more. I was like, well, you're bullish on it, right? He goes, yeah. You have extra money to spend, right? He goes, well, I do. And I said, how high do you think Bitcoin's going to go? And he said, I think it could conceivably go to $1 million by the end of the decade. I'm like, so why aren't you buying some at 40,000? And we were on a WhatsApp call, and he paused for a minute, and he goes, honestly, dude, he goes, because I bought in so early. And I'm like, there it is. It's an ego thing. You want to be, what's more important to you than, what would that be? 25xing your money at this point is to be the guy who says, I got in at $2,000 or $3,000 when this thing is now $1 million. You will forego all that potential money just to keep your average cost where it is right now and not have that number go any higher. Again, completely absurd, but that's what ego does to us. And I'm not going to lie, I have found myself in that exact same predicament, especially with Bitcoin. I was pretty early too. The lowest I got in was 8,600. I'm averaged in, a bit beyond that. But I bought a little more in the last few months, and that was kind of hard for me because I knew it was right, but at the same time, I can no longer say I'm the guy who's averaged in at 8,600, 9,000. That number's got to go up now. And like I said, I'm public. My opinions are public. And so that just makes it even worse. So Rob, I guess while we were talking about this, I wanted to throw that out there. And if you have anything to expand on that, I'd like to hear it, because I think this is a very real phenomenon. It just happened to me recently. And I'm curious to know how many of you it's affected too.
That was just a perfect story to really encapsulate what we're talking about here, is that all trading should be about is the numbers. Should be the numbers. It should be, okay, what do I have at risk? What do I have to gain? What's my potential upside? What's my potential downside? That's it. But it's not it. There are so many other factors. And so just this one you brought up of not wanting to raise your cost basis so you can brag about your cost basis, that's a real thing. And it all comes down to ego, how we see ourselves and how we want to be seen by others. It's a real thing. And so trading should just be this search for the best investment at the best time with the best results, with the best potential reward with the least amount of risk. That's all trading should be, but it's not. And that's why we are making this psychology podcast, because the numbers are easy. That's the easy part of trading. The hard part of trading is how to actually get over these things. So how do you actually get over your ego? Well, let's talk about that. The first one is you need to be humble. And look, I know that's easy to say, but how do you do it? It's easy for me to say, oh, Rob, you need to be humble. But then every time I look in the mirror, I'm like, oh, that guy's awesome. I love that guy. Well, how do you be humble? Well, you really just have to come down to our tagline that we've used in this podcast several times is you don't know shit. On any singular trade, anything can happen. Anything can happen. You can wake up tomorrow and there could be a world war that started with nuclear weapons. You could wake up tomorrow and have some great bit of news that shoots the market higher. That could hit the news line in the next 15 seconds to where everything in this world changes because of some news event that happens. You need to understand that you are so not in control, that there are just random things happening all over the place, and you as an individual are just trying to find your little moments to jump into this randomness and grab some money and then get out. So I need you, again, if you want, I had one person tell me that they actually printed up "you don't know shit" and put it in a picture frame and put it by their computer monitor. You need to get to the point where you fully understand that this marketplace, and again, I'm talking about every marketplace, stocks, options, Forex, futures, whatever it is, it's a swirling mass of chaos. And there is a lot of randomness in there that you can never figure out. You need to understand how small and insignificant you are, and that the market will absolutely crush you if you let it. So that's my first thing to really try to get into your brain is you don't know shit. Anything can happen at any time, and it will happen sometime in your life. The craziest thing you've ever seen happen. Let me tell you one example, and then I'll turn it over to you, Patrick. I was training for a triathlon. Now look, don't get impressed. It was a sprint triathlon, which means it was a 5K run, a 15-mile bike ride, and a half a mile swim. It was difficult. But I really needed to train for the swimming. So me and a couple of the other guys at the Maverick office were training for this, and we would go during lunch to the pool and train with swimming. So we were gone for like an hour, hour and a half. It was somewhere, I think, in 2011, where there was a flash crash and the markets dropped. It was 12% in a matter of minutes. 12% drop. And then it recovered 10% over the next 2 hours. I was in the pool when this happened. And by the time I got out of the pool and checked my phone, I didn't even know what had happened until I really started looking at things and said, oh my gosh. Understand how small and insignificant you are in this market.
Yeah, speaking of humility, God, I think we could almost do an episode just on this. But on the off chance we don't, let me say kind of my 2 cents here. I have fairly unpopular thoughts on humility overall. I don't think it's necessary most of the time. You know, like you said at the beginning of the show, Rob, you have to have ego even to get yourself into something like this. You have to have a certain level of ego to become great at anything. You know, look at anybody who's really great at something. You know, even if they don't express it outwardly, you can tell it's there. You know, and when it comes to people who make a lot of money, they all, unless you're talking to them, you know, much later in life, they all have gigantic egos. If you're going to do anything great, that's what you need. I've always felt that a lot of times when people say, hey, you need to be humble, what it normally is, and I noticed this when I was broke, and I felt the same way, that what they're doing is subtly, they're trying to take people who are more accomplished and who have done greater things than they have, and it's kind of a subtle attempt to try to get them to come back down a few notches and get closer to their level. So I've never really been a big fan of that like a lot of people are. It's a very kumbaya thing to say. There's really no risk at all by agreeing with something like that. All the risk is in disagreeing with it. So I don't like to say this out loud too much, but I've never been a fan of humility in general. That doesn't mean you're outward, and that doesn't mean you're outwardly dickish about, you know, what you do and what you can accomplish and things like that. Just that whole humility thing in the back of your mind, I think it mostly works against you as opposed to for you. However, in the situation you just drew out, yes, to sit there and think that you're bigger than the market, no matter how well you have been able to read it up until this point, it's the biggest mistake you can make. because then you start deviating from what got you there. Then you're like, well, I've been able to look at this chart and watch it move long enough to where I can tell just by looking at it where it's probably going to go next. Yeah, you stay with that. See how far it takes you. It's going to take you far until it doesn't, and when it doesn't, it's going to murder you. I can tell you this probably from experience. So, yeah, I just wanted to add that part in. Humbling yourself is important in this particular situation, but ego can also be a really good thing too. And I don't even know if it was necessary that I added this part in, but I just know when people hear the term be humble, they're like, oh yeah, you know what, I really should be humble. No, most of the time have that ego, but just don't ever think you're bigger than this market. Use the tools that got you to this point and just keep using them. That's all you have to do.
I totally agree with what you said. And look, you need swagger. You need ego. You got to walk around thinking you're the greatest thing ever. But this is how you have to think about you in relation to the marketplace. The term to be humble sounds stupid. And I agree with you that being humble doesn't really get you what you want. But it's not humility when it's you up against a 500-foot steamroller. That's not called humility. Like, there's no need to be humble. Like, oh, here's me, 6-foot me, against a 500-foot steamroller that weighs 20 tons. That's not humility. That's just reality. So I need you to get to the point where you feel like you are who you are and the market is a huge mountain. That's how much greater it is than you. When you can get to that point, it's not about being humble. It's just about understanding how you are a flea in this marketplace. When you understand who you are and your relation to the market, now you're in the right place to make trades. So you understand you don't know shit. You understand anything can happen at any time. And the third one, have no expectations on any single trade. One of the biggest things that I see with new traders is that they trade in a singular manner. And what I mean is that every trade is a totally singular trade. And they don't look at them in a group, like in a block, or like trades for the month or trades for the year. And so when they look again at a singular trade, all of their efforts are into this trade. All of their capital is into this trade. And that's usually what happens is they put all of their effort into the trade, all of their capital into the trade, and then all of the emotions come into this one trade. And then when they exit it, it's like they start it again the next time. That's exhausting. So have no expectations on any single trade. Know that you can be wrong at any time. That is going to keep you humble in the market. That's going to help you understand, hey, I don't need to make a stand. Like, I will never make a stand in my trading. I will never say, I know I'm right, I'm going down with the ship. Why? Because I don't want to go down with the ship. I want to be on the right side of the trade, like Joe said. I don't need to be right. I just want to make some money.
Yeah, expectations are a big one too. I almost feel like we're cannibalizing ourselves a little bit for future episodes because this is one of the things I wanted to touch on deeper, but I'll just say this now as well. There's a reason why in technical analysis I'm really against the whole idea of using technical analysis to decide how far a trade is expected to go. I think that is the worst part of technical analysis. I think that people who do it are charlatans, and I think everybody knows that that's just not how trades work. So much can happen in between now and when that expected level is going to occur that it's preposterous to even have any kind of expectation at all. Again, play the probabilities. It's probably going to go this way for a while, and just trade it and put your money management in place and leave it alone. Maybe deep down you do have expectations, but still, even then, get rid of that shit. Like, it's not helping you at all, and it's not realistic.
Once you understand how little control you have, the game becomes easier. The illusion that you have control, once you click that button, once you put your capital on the line, if you think you have control at that point, that's just totally aligned to yourself. At that point, it's totally out of your hand. And this randomness and wild market is going to make it go up or down or sideways. Who knows? No one knows. Stop lying to yourself that you know what's going to happen. Understand that anything can happen. That's how you stay humble, and that's how you get rid of your ego.
And on that note, I think this is a good place to wrap things up. Thank you, everybody, for listening to this episode of the Trading Psychology Podcast. Don't forget to go to YouTube and go down to the comments section and give us some more suggestions for things to talk about on this show. We want to hear from you. We want to talk about the things that concern you most. But again, thank you, as always, and Rob and I will both see you next week.
Goodbye, everybody.